Hello, everyone, and welcome to another edition of the Entrepreneur Journey podcast. And today I am super pleased to have with me Mike Margarella. Is that how you say your last name?
Close enough. It's Margarella.
Say it again.
Margarella.
Nice. All right. Well, welcome to the podcast, and we are super glad to have you here. I have a couple questions for you as we get started. So the first question is your favorite band or musician?
I'm not a big music person. I have been listening to a lot of country music recently, so I'll go with Luke Bryan.
Okay. I forget what that song is. His new one, country. It's country something. Country.
I'm a bad fan because I can't even tell you. I would know it if I heard it.
Yeah. I'm a fan of country music. I especially like more traditional style country music. Not so much the pop country music, but yeah. Let's back up. I went right into asking you questions. Let's go dive in and tell us a little who you are and kind of what you do, and then we'll get into your story and some questions around your expertise later.
Yeah, sure. So I'm a real estate investor. I'm also a real estate broker and a real estate attorney, and we manage rental properties through syndications and joint ventures, and happy to dig deep into it today.
Nice. So let me go back to asking you some off-topic questions, just some personal questions. Finish the sentence. Before I leave this world, I want to
continue building passive income and find a way to give back in real estate. That's something that's important to us, and we're working on some stuff now to maybe develop some affordable housing and things of that nature in the future. So we're excited that we're going to be able to hopefully do that.
That's awesome. All right. Okay. Now let's put you in a scenario. How much faith do you have in your survival skills? Like if you were to be on Survivor or one of those Survivor shows, how long do you think you would last?
I don't think I'd last too long. I'm not very hands-on. I'm pretty strategic. So maybe doing the whole who, not how method, I could team up with some folks who could help me get by. But if I had to rely on my hands, I don't know if I'd last that long.
You could take your entrepreneur mentality, right? Get the implementers on your side that can do the tasks.
Exactly.
Yeah. I think you'd survive a while then, until the implementers revolted on you.
Yeah, not that many people have the who, not how mentality. So
yeah, that's true. It's true. All right, let's dive into your story because I know you a little bit, not a whole lot, and I'm very interested in like how you how you became a lawyer, and then also how you started in real estate and all of that. So fill in the audience of like the Cliff Notes. I know it's probably a long story, but fill us in on the Cliff Notes.
Yeah, I'll try to keep it as brief as possible. So yeah, I'm an attorney. I've been an attorney for about 8 or 9 years now. I have been a real estate investor for the better part of 3 or so years. And I started out in the residential real estate space. And I think most people start out there because it seems like an easier lift. It seems like the place to start out. And most people don't even know that there's a whole lot more to real estate than just residential houses, because that's where most of us grew up and that's what most of us know. And that's what most people talk about. But quickly after we got into the residential space, we learned that we wanted to scale a little quicker, and residential real estate didn't quite meet our goals. So we transitioned over to commercial real estate and specifically self-storage. So now we own and operate several self-storage facilities, an apartment complex, some other commercial properties as well. And we run our entire real estate portfolio like a business. So we built a brand around our storage facilities, which is bigger garage, as you could see. We've vertically integrated into a property management company, which manages all of our assets. We have an employee to help us out with some of the day-to-day work and things of that nature. And we've just built a ton of relationships along the way. Going back to that who, not how mentality, there's a lot of things that we're just not great at, that we just don't want to do, that we don't have the time to do. And, we've teamed up with some pretty great folks to help us get to the next level, whether it be, marketing vendors to take some of the technology or social media stuff off of our plates or things of that nature. And with all that being said, we're starting a fund towards the end of Q4 here or the beginning of Q1 in 2023 to continue purchasing self-storage facilities and continue scaling.
Nice. I have some follow-up questions. So what got you interested in real estate?
I think rewinding back to the first podcast I listened to, it was a Bigger Pockets podcast. And it was after the NFL playoffs. And I'm a big sports fan, and there just weren't a whole lot of podcasts to listen to that I was interested in. And Bigger Pockets just popped up on my feed. And I listened to a few episodes there, and they talked about how you could build wealth through real estate. And I was hooked. It just made so much sense to me. And from there on out, I pretty much dove in head first.
Nice. So now I want to dive into your expertise a little bit. You're not a rookie anymore. You've been doing this for a while. So tell us kind of what the rookie mistakes are when someone first gets into real estate.
Well, there's a lot, and we're still making them now. So, it's impossible to be perfect. But I think the most important thing is just not getting stuck up in analysis paralysis. The best time to buy real estate was yesterday, and the next best time is today. And there's always going to be excuses as to why you can't get started, whether it be time or economic factors. And, obviously we're going through some economic uncertainty now, but the bottom line is that real estate produces tangible monthly income. It appreciates over time, and that's just been proven over decades and centuries. And if you don't have time, there's other ways to get involved too, whether it's through partnerships, passive investing, or things like that. So I would just say to those folks who are interested in getting started in real estate or just anything in the entrepreneurial world, it might seem daunting to get to the end, but just break it down into smaller tasks and move the ball forward every day, whether it's small things like, well, I shouldn't say small, but maybe time commitment wise, small things like education or starting a blog or going to networking events. Even telling your network that you're a real estate investor was so important for me, because a lot of people that we know, they like the idea of real estate and they want to get involved, but they don't know where to start. They don't have the time. They don't have the education. So if you start telling people, I'm a real estate investor, it's amazing the reaction you'll get and the doors that'll open, and it'll plant something inside you that says, man, I have to move this ball forward if everybody thinks I'm this real estate investor. So those are some of the things that I would say.
Nice. Being a lawyer as well, I imagine you have a little bit of advantage in the real estate space because you know some of the laws that revolve around it. So from your perspective, talk about some of the legal things that people need to know when they get started in real estate.
It certainly helps to have a legal background when we're closing transactions and dealing with title companies and other lawyers. And I draft some of our legal documents, and as you said, have somewhat of a unique point of view when I'm reviewing outside counsel legal documents for our entities. I think getting started, a lot of people get caught up in entity structure and asset protection and whether to form an LLC, whether to have a separate LLC for every property. And I certainly went through some of that analysis paralysis as well, and certainly helped that I was an attorney. But, I would just say that there's no perfect structure. There's no right structure. If you talk to 10 attorneys, you're probably going to get five different structures from those attorneys as to how to structure your portfolio. So I think the main takeaway is you'll refine those as you scale, but don't let those little details hold you up, and don't let those stop you from getting started.
Okay, awesome. Now let's dive into the self-storage, because that's really where you're focused right now. You're the co-owner of the Bigger Garage Self-Storage. What are some of the advantages of investing in self-storage over, say, residential?
Yeah, sure. So some of the main reasons we got involved in self-storage is because it's recession resistant. Nothing is recession proof, of course, but self-storage was the best performing asset during the Great Recession. And we could get into that more in a bit. There's no moratoriums in self-storage. So post-COVID, there were eviction moratoriums, and a lot of folks that were investing in residential real estate went through some tough times as far as payments. So in self-storage, it's auctions, not evictions. So not only do you have to not worry about that from a return standpoint, you also don't have to worry about it from I guess a sympathetic standpoint, right? I mean, a lot of residential investors were going through a tough time as to whether to put the pedal to the metal on their tenants who were also going through a tough time. So in self-storage, we just don't have to deal with that internal struggle. And then low maintenance costs. So residential real estate, obviously mechanicals, everything that goes along with a residential property, whereas self-storage is just four walls and a roof, and that's really it. Now there is some maintenance, but it's much less than what you'll see in the residential world. Barrier to entry. I think 80% of self-storage facilities are owned by mom and pops, whereas, you take multifamily, for example, it's more like 10 or 20% that are owned by mom and pops. So investors like ourselves have a better opportunity to get in there and find a better deal because there's just less institutional owners. So the folks who are selling maybe are looking to retire, maybe are looking to switch asset classes, and it's just a different base there. And then the final thing I'd say is accessible financing. Self-storage has the lowest default rate in the past decade or so. So banks like to finance it. And anytime you talk to a lender about self-storage facility, they get excited to talk to you.
Nice. I have a few questions kind of to expand on that. The first one is with the self-storage, can it be multi-investor in one property, or is it like single investor for each property?
So most of our properties are held by multiple partners with multiple investors. Nice. So that's the way we'll structure it. And then our fund, for example, will be, say, 5 self-storage facilities in one fund. So every investor will have a stake in each of those 5 storage facilities, which obviously helps for diversification and things of that nature.
And just to go back to what you said previously, in residential real estate, it seems like there's been a big move by hedge funds getting more into residential real estate and buying up a lot of the properties that smaller investors could have bought before.
Yeah, I think that's definitely true. And that's part of the reason why prices were driven up here in the past couple of years. Hedge funds, they just couldn't find anywhere else to place their money. There was nowhere else to get a return. So they turned to residential real estate. And to your point, there's just not quite as much meat on the bone for someone like ourselves who's looking to take on a few different partners to go invest in residential real estate. Whereas these hedge funds, they're borrowing money at, 0 to 3% even nowadays, and they just have a completely different business model than folks like us. So they have a different way of making money.
So another thing that you had mentioned briefly was how self-storage is recession resistant. Can you expand more on that?
Yeah, absolutely. So we're coming off a time where a lot of money was printed and a lot of toys were purchased with that money. And so occupancy at self-storage facilities currently is at all-time highs with boats, RVs, and just all sorts of household goods that are being stored there. And I certainly believe there'll be a leveling as we move forward and into a recession possibly. Self-storage is recession resistant because of 4 Ds basically. And those 4 Ds are downsizing, displacement, divorce, and death. And those are all things that increase during a recession. And those are all things that lead to more storage. So downsizing and displacement, for example, if folks are going from a 3-bedroom, 2-bath home to maybe a 2-bedroom, 1-bath, or even a 3-bed, 1-bath, they're just going to need more space for self-storage. And studies tell us that those folks just generally aren't going to throw out their personal property, and they view self-storage as a gym membership. Basically, it's $75, $100, $125 per month, and it's almost like an extension of their house or their garage in a sense. And then divorce, that's just one household becoming 2, and it's fairly obvious there why one or both of those folks might need storage. And then death, unfortunately. So as people die, they generally leave behind personal property to their loved ones. And those loved ones don't want to throw that property out, but they just don't have space for it. So they'll put that property into storage, or even if they decide to keep the loved one's property in their home, they'll put some of their own property in storage to make room for it. So I think those are the main reasons why self-storage is recession resistant. And I think especially nowadays, inflation's on everybody's mind. And I think self-storage is inflation resistant to an extent as well, because unlike some industrial assets or even residential or multifamily, there aren't 1-2 year leases or 5 or 10 year leases. In some cases, there's month-to-month leases. So on a monthly basis, self-storage operators can assess what their income looks like. They could assess what inflation looks like as compared to their rents. And it's not to say that you're going to raise rents on customers every month, Maybe you do that quarterly if in times like now where inflation is higher than it's been in quite a while. More common to do it every 6 to 9 months, let's say. And then finally on the inflation front too, self-storage facilities operate at a lower expense ratio than nearly any real estate asset, which means that as costs increase across the board for expenses like property taxes, insurance, materials, self-storage is just a little better insulated on that front.
Nice. So is there a way that people can contact you to find out more about what you do and how you might be able to help them get into not residential, but into self-storage real estate?
Yeah, sure. So I would direct them to our website. It's nextplayinvestments.com. So you could find my blog there. So we blogged quite a bit about self-storage and just the real estate industry in general over the past couple of years. You could find some information about our past projects and future projects there, and all of our contact information is there, and we'd be happy to chat with anybody.
Nice. So how can I ask, how do you help people?
Say that again.
How do you help people from a real estate perspective?
Yeah, I'd say there's two main ways. So the first is just getting them involved in real estate. Like I said, if there's folks who are interested in being passive investors, we have several passive investors in our deal, and it just allows folks to place money somewhere. Whereas now, if you have money in a savings account getting 1.5 or 2% yield, and inflation's at 8 or 10%, it's really losing money every day. And there's a lot of folks who aren't crazy about the idea of parking money in the stock market nowadays. And so it just gives investors an opportunity to place their money in something real. It's a real asset that's cash flowing on a monthly and a quarterly basis, and also appreciating like a stock. And then the second way is we're launching a boot camp actually in early 2023 to educate folks on self-storage and help them get started and purchase their own self-storage facility. So we're going to have it's going to be a 6-week course, mostly virtual, all kinds of templates and outlines and things of that nature, and all the information that we gathered when we got started and that we systemized as we built our business. We're looking to give that back, and we're doing that at a much reduced cost than anything else that's on the market. A lot of those boot camps that are advertised nowadays are in the $3,000 to $5,000 range. So ours is going to be in the hundreds for sure.
Wow.
And we think that's a part of the market that hasn't been tapped into yet, because there's a lot of folks who maybe are just considering whether to get started in self-storage or considering whether self-storage is right for them. And they might not want to go spend thousands of dollars to find that out, but a commitment of, let's say $500 is much more palatable.
Nice. So that isn't launched yet, but so they should just follow you on your blog and your website. We'll put all the links to you below this video and in the show notes for the audio podcast, so that when that is launched, that will be announced somewhere that you have on one of your platforms. Absolutely.
And anybody who reaches out to me through your audience, I'd be happy to share all the templates and outlines that we'll be giving to our students, I suppose, as soon as those are complete.
Oh, nice. Well, thank you for that.
Of course.
Mike, do you have any parting words for our entrepreneurs?
Yeah, I would say just lean into the uncomfortable. I think progress is on the other side of comfortable, and there's always going to be something on the other side that you don't know. Just prepare yourself as best you can. Take small steps every day and just take action.
Nice. Yes, definitely. Even if it's imperfect action. Don't, like you mentioned earlier in the interview, analysis paralysis. A lot of entrepreneurs get stuck with that and fail to move forward. So that is awesome advice. Nice. Well, thank you so much, Mike, for being a part of the Entrepreneur Journey podcast. For all you trailblazers out there, keep moving forward and hope to see you next time.